This is Market Day Report. Couple of interesting headlines. First one, Federal Reserve dropping their overnight lending rate by a quarter percentage point, now 3.75 to 4%. That happened yesterday afternoon. Federal Reserve Chairman Jerome Powell with that announcement. Some other interesting things out of that, but more on that in a moment. The other headline deals with China buying some U.S. commodities. Let's start corn market. We're watching corn move in lower territory. The trade range has been almost a dime here in the December, 4.29 and a quarter last check. That's down 4 3/4 cents. Over to the beans, and that was really where the announcement was, as Treasury Secretary Scott Bessent says 12 million metric tons between now and January, another 25 million annually for the next 3 years. So we're a little higher on the front 3 months here, with soy meal contracts moving higher for the 12th straight session, but bean oil starting to pull back. Ted Seifried's with Zaner Ag Hedge. I threw out the headlines there. Now let's make sense of it. What's happening?
Yeah, Tony, I mean, it's all about what's happening with the U.S.-China trade deal. The end of the night last night, late night, early morning South Korean time, we knew they met and they talked for 90 minutes and then they kind of left. And without any details last night, the market was down fairly sharply. But then at about 6:15 Central Time, Bessent was on TV talking about the details. And those details were 12 million metric tons for this marketing year and 25 million metric tons of U.S. soybeans to China for the next 3 years. That was rather friendly for the market. We rallied very significantly. These January beans have had a 44-cent range here today, Tony. It's been wild, but now we've backed off the highs. So the market's trying to figure all of this out. First of all, 12 million metric tons for the rest of this marketing year, I think was at the top end of some analysts' expectations, like myself. But it is a far cry from what we did in 2024, which was 27 million metric tons. And then when you look at the 25 million metric tons for the next 3 years, well, it's a good number, but there again, that's below the 27 million metric tons we did in 24. So these aren't wildly ambitious numbers. And I think that's actually the most bullish part about this, Tony, is that unlike phase one, these are attainable numbers. Now, they don't necessarily suggest wild growth in the U.S. soybean export program over the coming years. But what it does, Tony, is it effectively puts in a floor if the deal is honored. Now, that's also the big thing. This doesn't get signed till next week. And, I don't know if we can completely trust it as of yet. But if this deal goes through and these numbers hold true, it effectively puts in a floor or a worst case scenario for our soybean export program going forward. But it is not a representation of a massive expansion in our soybean program. And honestly, it's very realistic. And that, I think, is why the market has responded positively to it, but also with a little bit of trepidation, a little bit of uncertainty about whether it gets signed, and also trying to figure out what it means for us longer term.
I know we're still, 2 months away from Christmas, but maybe one way to look at it is we don't have as many presents under the Christmas tree, but maybe the boxes are a little bigger. So maybe that's one way to look at it. Would you agree?
Well, Tony, I would say we've got soybeans trading about $1 higher than it was on this date last year. So given all that, I mean, given everything in context, the lack of any China buying up into this point, I think this is a pretty solid gift, I believe. The question is, where do we go from here?
Yeah, exactly. All right, Ted, hang on. Speaking of where do we go from here, what about the cattle market? That's right around the corner. This is Market Day Report. Despite the losses here in the live cattle market, we're still trading higher year to date, up 19%. Now, the October contract will expire here tomorrow afternoon at 2:31:30. Where we're trading right now, it's a dime lower. Really trying to get a better idea of where cash will end up today, possibly tomorrow. Now we have feeders. They're off of their lows for the day. The November 341 and a quarter only down 82 cents. And then the hog trade looks like it could go lower for the seventh straight session. We're lower across the board. In Chicago, Ted Seifried's with Zaner Ag Hedge. What are your thoughts here?
I mean, compared to what's happening in the grains and soybeans specifically, this is a quieter day for the cattle complex, and I'm going to throw all livestock in there, hogs included. Again, a lot of focus on what's happening. And there is some exposure for hogs to a Chinese trade deal, although not explicitly talked about in the meeting. But good relations with China or improving relations with China could benefit some pork exports. But really, I mean, today is a day for the grains. Now, livestock, we had a bounce back day yesterday, although we were unable to close up near the highs. And now here today, we are down a little bit, but we're off the lows. We are consolidating. Take Jan feeders, for example, right on the 100-day moving average. This is a bigger, broader picture trend line support level. We're taking a bit of a breather, trying to figure out where we go from here. We don't have a time frame for that border to be reopening, but we know that the administration is really pushing for lower beef prices. So we've got a bunch of gaps to fill to the upside, Tony. I think eventually we do. But whether the highs are in for the cattle complex or not, I'm not sure. A lot of that depends on what happens from a policy standpoint.
How many had already called highs 30 days ago, 60 days ago? So a good point there. Ted, great to see you. Ted Seifried's with Zaner Ag Hedge. And by the way, you can catch Ted on Friday afternoon. He's on Commodity Wrap on Rural Radio 147.